Well, good evening and welcome to this live stream on the 17th of December 2024. Where on earth is the year gone? It's Martin North here from Digital Finance Analytics. Great to have you on the show tonight, and nice to see some new names as well as some of the old faithfuls to come back on the channel again. Thank you very much for spending some of your Tuesday evening with us. I have Leith, of course, ready to come in. Just before I bring him in, let me just remind you that we're not providing specific property or financial or legal advice. This is a general conversation only. We moderate the stream, but feel free to throw your comments and questions in, and feel free to have a robust conversation in the chat. I won't necessarily follow everything that's going on, but if you want to ask a question of Leith or myself, if you use Walk the World, that'll get that into my stream, and that means I'm going to see it. I've also enabled Super Chat, which means you can get your question to the top of the list, or indeed make a contribution to what we do around here. Always greatly appreciated. We do this not for profit, but because we think there's a really important conversation to be had, and your support makes us able to continue to do it. So thank you very much for that support. It is greatly appreciated. Leith, welcome. Good to see you back on again.
Yeah, g'day, Martin. Hello, everybody. Thanks for having me on again.
Well, it is good to have you on. And as we come up to the end of the year, there are so many things to talk about. But I guess just to sort of set people's expectations up, just for those people who may not know, Leith, just give us the 2-minute whistle-stop tour about you and where you've come from and what you do, because you've got a lot of fingers in lots of pies.
That's right. So I'm a ex-Commonwealth Treasury official. I finished up there, worked there 3 years to 2006, then went to the Victorian Treasury for a year, then Goldman Sachs for 5 years. Didn't like that, and then started up MacroBusiness.com.au with another guy called Dave Llewellyn-Smith. And we've been doing that for, I think it's 12 years, maybe going into our 13th, where we basically just write, economics type pieces, housing markets, that sort of stuff every day. That's macrobusiness.com.au. Do a lot of media, radio, and a whole bunch of other stuff. Also, we've got a managed fund called the MacroBusiness Fund with Nucleus Wealth, and do a bit on that as well. So yeah, sort of have fingers in a lot of pies. But yeah, look, my 9 to 5 job is writing articles on macrobusiness.com.au. That's where the bread and butter is.
Yeah, and of course you've had more and more media coverage in recent times. It's great to see that. And I think some of the discussion points that we've been touching on over the years were sort of out of the mainstream for a long time. It's becoming more and more a set of mainstream issues, because actually there's a bit of a burning platform now, right? We have a property crisis, we have an economic crisis potentially, we have a lot of people doing it really tough at the moment, and then of course we have the government coming out and saying, well, actually we don't want to see home prices down, we want to see them to continue to go up. This was a bit of a zinger, and it was a little bit of a touch point for raising some quite interesting questions about property. What's happening with property? Is it going to bust? 8 times now average income to get into the property market, 3 times 30 years ago. We don't have much supply of property. The whole property market looks a bit wobbly. Prices are moving down in some areas. But I mean, I have to say that government comment was a little bit touchy.
Yeah, it was. Look, but to be fair, I mean, I'm not going to, I'm not going to defend Claire O'Neill. I'm not a fan, but this has been going on for 20 years. So back in 2003, our illustrious former Prime Minister, John Howard, appeared on Brisbane radio, and he said that he's never met anybody who complained when the house price went up in value. And that pretty much is set. I'm not saying that was the only thing that said it, but that is indicative of the way our policymakers view housing. Basically, the electoral math is as follows. So roughly 2/3 of people either own the home outright or they're paying a mortgage. And about 1/3 of people in Australia rent. And as a result, that math means that politicians automatically favour the 2/3 over the 1/3. I don't think they should, because someone like me, who's actually has a small mortgage, luckily now, but owns a house that I live in, this one where I'm filming now, I still this house hasn't gone up in value in 5 years. It's probably lost a bit of value in Melbourne, but I don't care, and I'm happy for it. I don't care if it goes up or down. I'd preferably rather it go down a bit, because I've got 2 children, who are teenage children who will need housing in within 10 years probably. So, if people thought about it more in that light about, what's good, not just for them, but for their children, whatever, I don't think it should be necessarily a vote winner to have houses forever get more expensive. But unfortunately, our politicians see that 2/3 who own or rent, and those are the ones who they pander to. And we saw this with John Howard in 21 years ago. We saw it with Claire O'Neill last week on Triple J's Hack, where she was flat out asked, are your housing reforms, build to rent or help to buy, all her little, housing gimmicks, are they designed to bring house prices down? She said, no, we don't want to see house prices fall. We want to see house prices grow sustainably, which is really a bit of a BS statement, because house prices have risen so far above wages, and there is no such thing as sustainable house price growth when they're at this level. It's such a multiple of wages now that it is pretty much impossible to buy now if you're a young person about to enter the market. Well, about to enter the workforce, I should say, and you've got say student debt, you don't have parental help. I know a lot of people do, but if you're someone who doesn't have any parental help, you're pretty much locked out of a lot of markets here in Australia, especially in Sydney. I mean, Sydney's shocking, but also, increasingly, even Adelaide, Brisbane, places like that, Melbourne, you're going to be struggle to get anything half decent for, you're basically playing arm and a leg to live in a shoebox. And that's the unfortunate situation we've got. That's if you buy, but you're more likely to be stuck as renters for the rest of your life unless you have wealthy parents that can help you. And that's the unfortunate, system we've got now in Australia. And it's based on 25 years, roughly, of housing policy failure. And, that's continually pumped demand and, arguably choke supply, but it's more a demand thing. And that's the situation we've got. And it's been forced on us through obscene levels of immigration in the last 20 years, just keeps adding more and more people who need housing. Obviously, taxation policy is a joke. So, we give tax breaks to negatively gear and for capital gains taxes and tax concessions and all these sorts of things. We've got a tax system that punishes savings. So if you're saving up for a deposit and you're on the high immigration program, you're seeing your rents go up quickly as they have the last few years. You see prices get pushed higher, so it makes it harder to buy. And then when you save a deposit, you get taxed at your marginal tax rate because we tax savings at full whack. At the same time as the people you then bid to buy a property against, i.e. investors, can claim can claim negative gearing losses against their incomes to get a tax benefit. So the cards are really stacked against you. And that is the unfortunate system that we've created here in Australia. It needs basically a whole bunch of things, but first and foremost, I'd argue it needs much, much lower immigration. So sustainable low immigration, similar to what we had pre-2005 when it averaged under 100,000 a year. Instead of, the last year we got 450,000, and the year before that 550,000. Also, we need broad-based tax reform. So we need to dust off that Henry tax review and, curb property tax concessions, but also the way we tax labour. So we in Australia, we heavily tax workers. So if you're a regular PAYE taxpayer, you get taxed like an arm and a leg, but we don't tax wealth properly. We don't tax land. We don't tax resources properly. We need fundamental tax reform to take the pressure off workers, to also make it less advantageous to speculate on property, to lessen taxes on savings, so it makes it easier to save, all things like that. But unfortunately, there isn't a whole lot of political will. And as our illustrious housing minister, Claire O'Neill, said last week, they want to see house prices rise. And she certainly has delivered that, because as Home Affairs Minister previously, she ramped immigration to levels we've never seen before. And that's what, is that's the primary reason why house prices rose, despite the fact that interest rates went up so much. That's really an immigration story, because when interest rates go up, house prices should fall. And that's the usual relationship. But that relationship was broken when they rammed in 1 million net overseas migrants in 2 years. And that was under Claire O'Neill as Home Affairs Minister. And now she's Housing Minister. She's now gaslighting us on the housing side. So, yeah, it's a pretty unfortunate situation we've got here.
Yeah, and just a couple of points there. The first is, of course, that the problem for anybody trying to get into the housing market, that housing affordability is shot completely. There was this article that came out saying, well, it's now you need $200,000, equivalent of $80,000 a few years ago just to get into the housing market. And I think that's probably right. But the other thing that's happened is that the average duration of the mortgage has got kicked out and kicked out and kicked out. So people are actually borrowing more for longer, and it's sucking up more of disposable income. I made a show the other day showing that the percentage of income going to either rents or for mortgage is never been higher for many people. And so the disposable income that people have to buy other things is actually getting less and less. That's one of the reasons why the economy is so weak at the moment. And you mentioned the rental sector. Of course, the rental sector is also subject to rents going up. One of the reasons why rents are going up is because investors are trying to cover the costs of those higher mortgages so that they're leveraged up, and they're trying to sort of transfer that into the rental sector. So effectively, although it's a third have a mortgage, a third have a property outright, and a third are renting. Actually, if you look at the impact of the high interest rates are hitting a lot of people in the rental sector, and roughly half the people with a mortgage who are actually up against it. A few others with smaller mortgages doing fine. And of course, those without a mortgage are probably doing fine too and are riding the capital value. But this is an unsustainable situation that we've now got ourselves into. And so maybe it's not surprising that we're starting to see now in some markets, house prices beginning to ease back, the listings begin to rise, and the settlements begin to fall. So we are in a very, very wobbly situation with regard to property. But the point to make is this is not the end story in itself, right? This is created by this broader economic canvas that we've started to touch on, to do with migration, it's to do with government policy, it's to do with tax policy, it's to do with lack of productivity. All of those things are feeding in. And it's not just a question of supply. If we built more property, we could solve the problem. It's a much bigger problem.
Yeah, and the policymakers always like to paint it as a supply issue because it's the most convenient, right? You can keep running the high immigration and everything, and then you can just point to this fantasy of supply being the problem when really it's an excessive demand problem. Let's be honest. And the fact of the matter is, I've actually got some charts if you want to switch across just on the supply side, just quickly. Might as well go there, given. Listeners have probably heard about the Albanese government's housing target. So they've about a year ago, in May last year actually it was, they went to the National Cabinet and they devised this fantastical figure that they're going to build 1.2 million homes over 5 years. So that's 240,000 homes a year. It's 20,000 homes a month, or 60,000 homes a quarter. Now, the chart on the top left there has Albo's housing target with the red line, and the blue line's actually what we're building. So that's actual completions. And we're tracking about a third below what Albo's housing target is. So it's, tracking at about 170,000 completions, and actually dwelling approvals are tracking closer to 160,000. That's the forward-looking indicator. So we are miles away from that target. And realistically, we're never going to, well, I can't say never, but in the foreseeable future, we're not going to get anywhere near that target because we've got elevated interest rates. So the last time we hit our record housing completions for the year, which was 223,600, the official cash rate was 1.5%, and it's currently 4.35%. And yes, sure, the RBA might cut rates a few times next year, but it's probably not going to get back down to 1.5%, given the structurally higher inflation we've got now. So that's going to be a factor. And the chart I've got in the top right there comes from the RBA. And that actually shows you the historical correlation between building approvals and interest rates, the cash rate. So what it shows is that there's actually usually a pretty strong correlation. So when interest rates go up, construction goes down, vice versa. So if we're going to have this structurally high interest rates, well, it's going to make it pretty hard to meet that target. At the same time, the bottom right-hand corner there is pretty important. That's we've got structurally higher construction costs now. So since the pandemic hit, the cost to build apartments, houses, etc., has gone up about 40%. And yes, that inflation has come back down, but it's still historically elevated. So the rate of growth in those costs has come off, but we're not going to give back that 40% that has gone up. So costs are now structurally higher. They're structurally higher by about 40%. And then on the bottom left, we've still got very high population growth. So, if you believe the official Q2 population data that came out last week, it said that population grew by about 550,000 in the year to June. But strangely, the Q3 national accounts was actually 100,000 higher. And that came out 8 days before. And that said that we're tracking at 650,000 population growth. Sorry, 640,000. So, what this means is that effectively, in basic economic terms, this higher cost structure that we've got, both in interest rates, materials costs, we've seen massive insolvencies in the construction sector. So we've got actually less capacity to build houses because a whole bunch of home builders have gone under. I should have put a chart in about that. But you got to take my word for that. We've seen, thousands of home builders go bust. And also we've got big build infrastructure projects going on with the state governments. That's sucking away tradies, construction workers away from the housing sector. So effectively what we've got is what's happened in the chart on the top left, which is basically the supply curve for housing has shifted left, which means that we can't produce as many homes, and the homes that we do produce are going to cost more than they did previously, which means that we've got to have a structurally supply constrained market as long as we have higher interest rates and these higher construction costs, which, that's a 40% increase in construction costs. I can't see them going back down. And that means that you've got almost next to no chance of meeting the Albanese government's, 240,000 a year, 1.2 million homes over 5 years target. And at the same time, the federal government still, forecast historically, very high immigration going forward. So this is just a recipe for disaster. And what it basically tells you is the federal government is directly working to basically keep the foot on housing demand, forever, because it's going to keep maintaining this high immigration. At the same time as the supply side has structurally changed since the pandemic, and it's become harder to build homes because the cost of building those homes has gone up. And in fact, and one thing, the federal government, state governments, the industry keeps talking about how we're going to have this high-rise construction boom and how they want to get everyone into higher towers and shoebox apartments. But an analyst, CBRE, which is an internationally renowned analyst, they projected that Australia's apartment supply over the next 5 years is going to be basically half what it was during last decade's peak. And they also said in order to get more construction, the price of apartments is going to have to rise by at least 15% to entice developers to build, because at the moment they can't build, they can't make money out of it. Well, if you do that, you're just going to choke off demand because they're going to become too expensive to buy. So this whole thing is a powder keg, and the ultimate solution, when you've got a supply constrained market, you have to, and the supply curve shifted to the left, well, you've got to shift demand to the left as well to match it. And what I mean by that is you've got to reduce demand, actual demand. And the way you reduce demand is reduce net overseas migration. So you reduce the amount of homes you need to build when you can't build as many homes. It seems pretty logical. But unfortunately, the federal government, state governments, the migration shills, the industry, they always try and paint this as a supply problem and something that can just be magically fixed by we just need to build more. They always ignore the demand side, which is i.e. immigration. And if you think about this from a first home buyer's perspective, running a high immigration program is the worst thing you can do for first home buyers. Like we talk about negative gearing and all that sort of stuff, immigration is way worse. I'll tell you why it's worse. Because A, it makes it harder to save up a deposit because high net overseas migration pushes up your rents. So if your rents go up, you got less disposable income, which makes it harder to save a deposit if you need to buy a house. And then it also puts upward pressure on house prices. So it's a double whammy. You end up paying more in rent, so you can't save a deposit. And then you end up paying more to then buy. So you get hit twice. Whereas, negative gearing and things like that aren't great. They're certainly not good for first home buyers. But at least they don't impact the rental market. Whereas net overseas migration hits the rents and it hits prices. And by hitting rents, you then make it harder to save up a deposit, which then makes it harder to buy. So, the number one solution, if you want to fix the housing market for first home buyers, is to cut immigration dramatically. And that way we don't have to build as many houses and we're more likely to oversupply the market with houses. And that would be the easiest thing for the federal government to do. But unfortunately, there is no will to do it. And even Peter Dutton has walked back his promises to cut immigration. So, he was coming out with some big words, and about a fortnight ago, he's walked it back and he won't give any targets anymore. And that just tells you that Labor and Liberal are like Pepsi and Coke. They're both wedded to this high immigration. It's just a matter of degrees. And the situation's not going to change.
Yeah, and this underscores a couple of observations. Firstly, it's taken 20 or 30 years to get to this horrendous point that we're in. I started reporting mortgage stress back in the year 2000, 2001, because I could see the early signs. They changed the tax and then they changed this and they changed that. And I could see the momentum starting to build. And I'd seen similar trends in the UK previously. So I was a bit sort of ahead of the curve with regard to that. It's taken a long time to get to this point. We've also got, though, a narrowing of the economic base of Australia. So if you look at where we are now comparatively with many other economies, we're way down the list. And basically, if it's not for the mining sector and for the housing and construction sector, we've got nothing, because manufacturing has been squeezed out. The broader economy is just narrowed. So we have this desperate situation where the growth levers available to government are migration.
I'd actually argue it's two growth cylinders. So we're firing on two cylinders, which aren't sustainable. But yes, migration number one. And, remember, the federal government likes immigration because it juices aggregate GDP, makes the economy look better than it is. They also collect 80% of tax revenues. So when you bring in a whole bunch of migrants, you get more personal income taxes. Number one, that's the main driver. You also get more company tax revenue. So the federal government just sees it as easy way to print some money. Problem is the cost of that is then deferred on state governments, it's deferred on individuals. Who then, the state governments then build toll roads and they privatise everything, and then we end up paying more as citizens. But the federal government just sees it on their balance sheet as a positive. The other growth driver is obviously the federal government spending. We've got record public spending at the moment, and obviously that's unsustainable. But the public spending is the thing that is driving that alongside migration are the two things that are driving the aggregate economy at the moment. And the private sector is stuffed, basically. And per capita, we're going backwards. So should we run through the Q3 national accounts quickly, do you think?
Yeah, good idea. Why don't we do that? Yeah.
So I've got some quick charts here. This is from the Q3 national accounts that were released at the start of the month. So top left-hand corner, we've got Australia's GDP growth. That's the aggregate growth in red. So that looks okay, like it's weak, but the more important one is the blue bars. And per person, so that's everyone's slice of the pie when you adjust for population growth. We've been going backwards for 7 consecutive quarters, or 7 of the last 8 quarters. 8 of the last, anyway. So the last 7 quarters, we've gone backwards. The centre top chart there plots Australia against Canada and New Zealand. We're all 3 countries are basically following the same path. US is way out in front. UK is actually at 0 growth, per capita growth in the last year. Now, as bad as the per capita growth is, the aggregate growth on the top right-hand corner in annual terms was just 0.8%. Now, to put that in a historical context, that is the lowest rate of annual growth since December 1991. So the overall economy is sick, but once you adjust out population growth, which of course has been very high, it's very sick. And the key kicker for us, because everyone who's listening to this is part of a household, right? So we care about the household well-being most. The economy is split up into 3 areas. So it's basically households are the biggest, government, and then business. We care about households because that's where we live. And the bottom left-hand corner, the real per capita household disposable income in Australia has crashed by about 8.4% since the Albanese government came to office in Q2 2022. That is the biggest decline in the nation's history, in recorded history. You can see that in the black there. It's more than double the early 90s recession decline in per capita household income. The middle bottom chart there compares Australia's decline. CBA put this together against other advanced nations. As you can see, we've had the biggest decline in the advanced world in our real per capita household disposable income. And the chart on the right plots our consumption, real per capita household consumption, which also fell by around 2% last year. So that actually drove the per capita GDP decline. The one thing that stopped the economy from being even worse, apart from immigration, is the massive government spending. So, principally through things like the NDIS. So public demand as a percentage of GDP is plotted at the bottom left-hand corner from Westpac. It hit a record high, 27.5%. So 27.5% of Australia's GDP in the September quarter came from government spending. And a lot of that is related to things like the NDIS. So the NDIS has been growing at a rate of 20% per annum, roughly, the last 5 years. It's tracking at close to $50 billion now, and it's projected to rise to nearly $100 billion per annum in about a decade. So the cost is growing very strongly, and it's obviously driving Australia's jobs growth. So some charts there on the right plot Australia's, healthcare and social assistance employment against, comparative to the world. So the bottom right-hand corner plots Australia's growth in healthcare and social assistance employment against Canada, United States, New Zealand. As you can see, we've had a massive growth in those bedpan type jobs, and that's related to the NDIS. And the middle bottom chart there shows that all of Australia's GDP growth for the last 2 quarters came from the public sector. So the private sector actually, was dead flat in aggregate. So we had no growth for the last 2 quarters. All of Australia's aggregate GDP growth. So remember, we've gone backwards per capita, but the aggregate growth, all of it came from the public sector, from this sorts of spending. And it's the same in the labour market. So the labour market, Australia's unemployment rate's really low at the moment, 3.9%. It's world beating. The government's crowing about it. The problem with it is 100% been driven by these health jobs, like we saw in this chart here. So Alex Joyner, IFM Investors, did some fantastic charts, and he showed that since Q4 2022, Australia's market economy, so that's basically your private sector economy, stuff that's not driven at all by government, jobs in that market sector grew by less than 1% since the fourth quarter of 2022. Whereas these non-market jobs, the government-aligned sector, they call it, so they're public servant jobs as well as private companies that are funded by government. So if you're an NDIS provider and you receive, funding from the government, you're counted here. Those jobs went up by 15.5% over the same period. And in fact, it's even worse than that. If you go all the way back to the global financial crisis in 2008, as you can see, between 1996 and 2008, the market and non-market sector employment grew basically hand in hand. But since 2008, this is according to Alex Joyner, non-market jobs, so the government type jobs, grew by 82% versus only 20% growth in the market sector, or the private sector, if you want to call that. So this just shows you that Australia's economy, and the labour market in particular, is being driven by public spending. And it has been for a long time to a large degree. And that's not particularly sustainable. And it's actually having a negative impact on Australia's productivity. So Australia's labour productivity growth in the Q3 national accounts absolutely collapsed. So in aggregate, in total, it's fallen to 2016 levels. So we've effectively had no growth in productivity for 8 years. And we've actually gone backwards in the last few years. And as you can see in the chart in the top left, that's by Justin Farbo at Affordability Macro. He shows that the productivity in non-market sector, so these government-aligned jobs, is the same as it was 20 years ago. So we've had no growth in these non-market jobs, labour productivity, for 20 years, whereas the market sector's experienced decent growth. And this explosion in non-market NDIS type jobs and other areas which are government aligned has basically helped to crater Australia's productivity. And the chart in the top centre there shows that Australia's had the worst productivity growth out of advanced nations since 2018. And a lot of that is this story. Now, there are other reasons why Australia's productivity growth sucks. I wrote an article on it earlier in the week. I basically put it down to 4 factors. So Australia's productivity has been falling for about 20 years. And there's a few drivers behind it. So first of all, I put it down to the commodity boom in the early to mid 2000s. So when the commodity boom happened and we got all the mining investment and commodity prices shot up, the Australian dollar shot up. So we had a real exchange rate increase. And what that did was it made our manufacturing less competitive and actually helped to shrink Australia's manufacturing sector. And our manufacturing has historically, globally, been the main sector where you've had the most productivity growth. And that's because it's internationally competitive, so you compete with the world. It's also highly mechanized. You can invest in capital, in extra new capital, new techniques, new technologies, that sort of thing. And so it's always driving productivity growth. But because our manufacturing sector has shrunk, and it's actually the lowest in the developed world now at around 5%, less of our jobs that come from manufacturing and more of them come from services where you don't get this productivity growth. And you can actually see the bottom left-hand corner there shows that Australia's manufacturing sector has roughly halved. Well, it's actually more than halved since the start of the century. So the start of the century was around about 12% of Australia's GDP. If you go back to the 70s, it was about 25%. And now it's under 6%. So basically our manufacturing sector has shrunk. Another thing that's helped to shrink the manufacturing sector more recently has been we've had this energy price shock. So I've talked about this previously, and this is shown this is sort of replicated in the chart in the middle center, bottom middle. That weird looking chart in red that's Australia's East Coast gas price as of yesterday. And Australia on the East Coast historically paid about $3 a gigajoule for our gas. But when we built those Gladstone LNG terminals, the export terminals about a decade ago, suddenly the East Coast market was linked to the world market. And East Coast Australia was the only place that exports gas in the world that didn't have any domestic reservation. Our idiotic policymakers decided not to do it. And as a result, it's basically we basically pay world prices now on the East Coast, despite the fact that we export 3/4 of our gas, and most of it goes to China. And as of Tuesday, we were paying $19.50 a gigajoule for our gas. Now, to put that into perspective, Americans, who are the biggest gas exporters in the world, they pay about US $2.50 a gigajoule, or about $4 Australian. So we're paying about 5 times the cost for gas that Americans pay. And America is the biggest exporter. We're the second biggest exporter. And what that's done is it's also forced up the cost of electricity, because gas is the key peaking fuel to back up renewables, and it sets the electricity price. And what this has done, we've had this joint shock of high gas and high electricity prices. And what that's also done is it's also shrunk Australia's manufacturing. So we've had the commodity price boom, which pushed up the dollar, sent a whole bunch of manufacturers broke. We've also sent a whole bunch more out of business by engineering a power shock. So Australia being the biggest, an energy superpower who exports, the world's biggest coal exporter, second biggest gas exporter. We've got tons of uranium. We export all sorts of, other rare minerals, etc. We are an energy superpower outside of oil. We should have the lowest energy prices in the world, but somehow through government idiocy, we've instead given ourselves some of the most expensive energy prices in the world. And as a result, our manufacturing has shrunk even more, which has also killed our productivity. 2 other factors that have, or I should say another factor that has killed Australia's productivity, apart from NDIS, high energy prices and global commodities boom, is we've run this high immigration program for 20 years. And that's the chart on the top right-hand corner and the bottom right-hand corner. Top right-hand corner comes from Jared Minack. And what it shows is that we've grown our population faster than we've built infrastructure and business investment and housing. And as a result, we've had what economists call capital shallowing. So we've had less capital per worker because we've grown the population faster than capital. And to give a sort of stylized example of what I'm talking about, if you run a cafe and you've got one coffee machine and two people work in that coffee machine, and you can produce 50 coffees an hour, if you double the number of people working on that one coffee machine to 4, you won't be able to then double the output of coffees to 100 an hour, because those 4 people will have to wait for each other. There'll be congestion around the cafe while they bump into each other and, wait their turn, etc. And then, so effectively you get capital shallowing because you haven't doubled the number of coffee machines to go with double the number of staff. That's effectively what's happened to the Australian economy. We've grown the population by 8.5 million people this century through immigration primarily, but we haven't built nearly enough infrastructure, business investment, housing, and all the stuff to go with it. And as a result, we've become less productive. So those are the sort of 4 horsemen of Australia's productivity apocalypse. You've got the mining boom, which gave us Dutch disease, sent the Australian dollar up, made manufacturing less competitive. You've got high energy prices, which has compounded that. You've got the boom in low productivity NDIS type jobs, so government jobs, low productivity government jobs. And also you've got mass immigration overrunning the supply side of the economy. And that's the reason why Australia's got this, terminal decline in productivity. And I just can't see it turning around, Martin, especially, with the policies that we're running, because it just seems to be the solution is just to keep doing the stupid things that haven't worked. And that's how Australia operates.
Well, just to underscore, these are policy decisions taken by governments over the last 20 to 30 years, right? And so a lot of the pressure that households are under and a lot of the issues with regard to the unaffordability of housing are directly sheeted back to these policies that governments have actually executed. Both sides of the house, as you say, both sides of politics are actually on the same side when it comes to a lot of these issues. So it's really important to understand. And yet, as you say, there is no glimmer of any change of trajectory from either major party at the moment on these critical issues. Now, just on that, one of the interesting questions that came up in the chat, and Jerry, thanks for the super chat, was talking about the gross revenue from mining and the tax take from mining. And we should also add, of course, the massive taxpayer funding and incentives to the mining sector, because I would argue that one of the other things that's going on here is how much money, our taxpayer money, is actually going directly to a lot of the big end of town to help them not help us.
Yeah, look, we so undertax our resources industry, it's not funny. And the perfect counterpoint to this is Norway and Qatar, right? So Norway has, immense, well, it had, I'm not sure if it's still exporting as much now, it's probably run out to a degree, but it had immense sort of oil reserves. And what they did, they're very smart, the Norwegians. So they recognized this decades ago, that they said, okay, we've got this finite resource. We're going to be exporting tons of oil from the North Sea. And so what they did was they taxed it at a very high rate. And part of the reason why it's taxed at a high rate is that some of the companies that drill for that oil and sell it are actually Norwegian. So they're Norwegian owned. They're not private companies. So the profits go to Norwegians, but also even if they're not a Norwegian firm and they're another private player, they get taxed at a really high rate. And what they've effectively done is they use this bounty from these exports to then put into a sovereign wealth fund, which is the largest sovereign wealth fund in the world. And what it does is that the Norwegian sovereign wealth fund basically channels the profits from its oil and gas industry into the fund, which then invests outside of Norway. So, for example, Norwegian sovereign wealth fund, as I understand it, is the biggest investor in the world in Microsoft, for example. So it just invests in shares all around the world, not Norwegian, so it invests offshore. It does that to put downward pressure on the Norwegian kroner, because if it invested this massive fund domestically, it put upward pressure on the currency. And this Norwegian sovereign wealth fund, which I've actually got a chart of in the on my slide pack, is now worth about $310,000 US, $310,000 US per resident. So that's the chart on the center bottom there. Now, Norway is a country of about 5.5 million people. So it's basically the size of Melbourne plus Geelong, or Sydney plus Gosford. And it is sitting on this sovereign wealth fund that if they had to liquidate today at market prices, they could give every Norwegian a check for about $310,000. Why didn't Australia do something like this? We are sitting on so much wealth. And just to underscore the taxation of the oil and gas industry, the chart on the top right, the bottom right, I should say, is this was compiled by the Australia Institute a few years ago, and it showed the orange bars there show the Norwegian government's tax take from their gas and oil sector, and the blue bar, the remainder, I should say, is the revenue. So they tax at about 80%. The chart directly above that is how we treat our oil and gas sector under the petroleum resource rent tax. And as you can see, our tax take up until 2020, so it's a couple of years old, it's probably changed marginally since then, but you sort of get the drift. Our tax take from our oil and gas sector, gas, I should say, has basically fallen. So we're getting less tax. Well, we were getting less tax in 2020 than we were in 2013. That's shown in the orange in the top right chart, whereas the revenues, which are shown in the blue, went through the roof. So the Norwegians directly below us in that chart, taxing their oil and gas sector heavily. We're taxing ours very lightly. Now, if you go to the top center chart there, this is also compiled by the Australian Institute, but these are solid figures. These are just pulled out of the Australian energy statistics. They haven't duked them. What it shows is that Australia exports into the 2021-2022, we exported 82% of our gas was exported. So we're only using 18% of it at home. This is East and West Coast combined. So on the East Coast, we export about 75%. West Coast, they export, I think it's 85%. So when you divide the, sum the two, it's about 82% used for exports. So we export most of our gas, well, almost all of our gas, but we don't tax it properly. And we could have done what Norway's done there. We are the second biggest gas exporter in the world, but we don't get a decent financial return out of it. And here's the ridiculous thing. Whilst Australians have been told net zero, net zero, net zero, we've got to cut our gas use because it's bad, emissions, blah, blah, blah. We use nearly as much gas, and that's shown in the 7.3% figure there in the chart, the top center. LNG export terminals converting gas to liquid to put on a ship to send to China and Japan, for example, use 7.3% of the nation's gas. All right, now compare that to our households who use 2.6% of Australia's gas. So we are literally using about 3 times as much gas to merely freeze it into liquid to then put on a ship to then transport it to China and Japan, for example, than we use as households. We use more gas converted to liquid than we do manufacturing, 6.4%. And we use more gas converted to liquid than we do for gas to power to make electricity, 6.2%. So what are we doing here? So Australians have been told that we're not allowed to burn our own gas because it's bad. It's going to create emissions. Whilst we burn a ton of that gas to put into liquid to send to China so China can burn our gas. And I wish I'd included in this chart pack a chart of Australia's emissions against China, because China's emissions are going up like that, almost a straight line upwards. They've accounted for 2/3 of the world's increase in carbon emissions since 2000. Australia's emissions are a rounding error. You can barely see them, and they're dead flat. And yet we are being told to sacrifice our economy, to pay higher energy prices, to shut down our coal, to shut down everything for the sake of net zero. And we're basically deindustrializing Australia's economy. Our manufacturing shares halved in the last 20 years. We're basically forcing our manufacturing sector out of the country so that we can then send it to China so they can do it instead and make even more emissions in a dirtier environment. To me, that does not make sense. So I think it'd be better for the environment if we literally just didn't export it, didn't waste all that fuel freezing it to put on a ship, and we just used it at home. And we gave ourselves cheap gas. What do you reckon?
Yeah.
This is what drives me nuts about this net zero stuff.
Yeah.
I wish I'd include the chart here, but Australia is such a rounding error in that our emissions are not growing. They haven't grown for decades. China's are going up in a straight line, vertical. Literally 2/3 of the world's carbon emission increase has come from China this century. And yet all the developed worlds, not just, Australia, UK, Canada, we're all being told, net zero. We've got to basically deindustrialize. We've got to, drive up our energy costs. We've got to do all this stuff. Meanwhile, all we're doing as countries is we're sending all our capacity over to China, who's making the emissions anyway. It's probably better for the environment if we didn't do that stuff. We didn't send it all to China. We just did it here. We'd probably have less total emissions and we'd have more balanced economies. What do you reckon?
Well, of course, the government says, we can't mess around with our international agreements because of sovereign risk, right? Which I think is complete BS.
Total BS. Look, it's complete. It's insane. And Rex Patrick, discovered that firsthand. So he's the former senator for South Australia. And, he's a patriot. So he was behind forcing the Turnbull government to introduce an Australian domestic gas reservation mechanism under Turnbull. So what it basically was, they set up some legislation to enable the federal government to force LNG exporters on the East Coast to supply the domestic market. And that was Rex Patrick's doing. He's the one who in exchange, I think, for voting on, I can't remember the bill, that was the price. He made Turnbull create this domestic reservation scheme.
Yeah.
Problem is, none of the federal governments have ever used it. And when Russia invaded Ukraine and our gas price went through the roof and our electricity price then went through the roof, the Albanese government should have pulled that trigger and forced them to supply the domestic market and forced them to do it at a cheap price. But they didn't do it. And, so there's absolutely no will to change things here, unfortunately. And Rex Patrick did an FOI request trying to, because the former government, the Morrison government, was looking at a domestic gas reservation. They did a study on it, never got released to the public. He did an FOI to get it released as a private citizen. He got knocked back. He then took it to the Administrative Appeals Tribunal, spent $1,500 of his own money. He then confronted a swag of lawyers from the Department of Energy who basically argued against him to not release it. And one of the reasonings was it could embarrass our customers in Asia, who might get angry if they found out that we were looking to reserve our gas for domestic use. And the Administrative Appeals Tribunal granted in their favour. So we've got traitors as politicians. China has literally cancelled oodles of export contracts on Australia. But the mere thought of us maybe cancelling one of their gas, contracts to sell them gas at a ridiculously cheap price that was negotiated years ago in a different environment that we've got now is looked at, we can't do it. We're not allowed to do it because that'd be embarrassing. It's just insane. And meanwhile, while this is going on, China and Japan, who are the two markets that we sell most of our gas to, China, mostly China, but then also Japan, both of those countries are receiving more of our gas than they need. And they're actually re-exporting it for profit. So we're giving them more gas than they need at cheap long-term prices that were negotiated years ago at much cheaper prices than we pay now. At the same time as Australians on the East Coast are short of gas, we're facing energy shortages, blackouts, etc. And we're not allowed to dare think about reserving some of this gas for domestic use, which quite frankly we should never approve those Gladstone LNG projects without domestic reservation. It was stupid. And that's basically why we've got ourselves in this ridiculous energy predicament, whereby, we're being told we've got to shut down all the coal-fired generation because it's dirty. We're trying to replace it with renewables that are very intermittent, and quite frankly, they're expensive. They're not expensive, on a marginal cost basis, but the infrastructure required around them is expensive, but they're also very intermittent. So, solar peaks at about 3:00, and then after 3:00, it falls off, and then at nighttime, you're obviously not getting solar. So just as people get home from work, when energy demand spikes, solar is coming off big time and it's almost gone. Wind is just very, unpredictable, because some days it's windy, some days it's not. So you need, if you're going to try and transition everything away from baseload power like coal into renewables, you need a backstop. And the only backstop that makes sense is gas, because gas you can turn on and off very quickly. But then we've made gas uber expensive. We've engineered a shortage on the East Coast. So we've completely stuffed the energy transition here. We've shut down our cheap, reliable baseload power in coal. And it was cheap and reliable for generations. But because it's dirty, we're not, we've said we can't do it anymore. Meanwhile, China's building heaps of coal plants, by the way. That's fine if we had cheap gas. But we don't have cheap gas because we've stuffed that up. And the classic counterpoint is the United States. The United States is shutting down all its coal stations. It's shut down heaps of them. The difference is the US has replaced those with gas. So as it builds out its renewables, it's got the gas backstop. They've made gas incredibly cheap. And as a result, US has cheap power. It's got cheap gas and it's got cheap electricity because gas is cheap. We've got expensive gas and therefore expensive electricity on the East Coast, on the East Coast, because gas is expensive. But you cannot dream up a bigger cluster, than what we've got in Australia. We've gone from having some of the cheapest energy in the world to some of the most expensive, and we've completely deindustrialized the economy. We now rank, Martin, 102 on Harvard's Economic Complexity Index. Down, we've fallen from about 60 in 2000 to 102. So, in the year 2000 wasn't great. We're 60. But now we're 102 out of about 150 countries. We have literally fallen. And the previous one, which was a shocker, we were 93. So 2 years ago, we were 93. That's done every 2 years. Now we're 102. We are literally behind Bangladesh and Senegal. Our economy has become is about as complex as the most simple African nation now, because we've deindustrialized so much. We can't even make tin cans anymore to put our, fruit and canned veggies in anymore. That's all important. Everything is becoming important now because we have lost our self-reliance, because we have lost our manufacturing capacity. And as a result, we've got a low productivity economy. So, it's a pretty, I know I'm being a bit of a Debbie Downer here, but I've just watched the disintegration of this country in the last 20 years, especially mostly in the last 12 since I've been doing MacroBusiness, and it just beggars belief. It really does. It's quite depressing.
Yeah, it is, unfortunately. And I was, in Australia from 1994 onwards. And when I first came to Australia, I felt it was a really good place to be. But I was seeing all of these, death by 1,000 cuts. And I think the last 5 to 8 years in particular has been, pretty disastrous. But I guess the question, Leith, is who is really calling the shots? Because it seems to me that the politicians, they may say stuff when they're not in power, but as soon as they get into power, it's like, they've got no brains to think independently. They're sort of just following the yellow brick road to nowhere. And I sometimes question, well, is it simply because you've got so much power coming from the large corporate sector and the lobbying power, big banks and big mining and et cetera, or is it the Treasury that actually have these fixated views on how the economy should work, and irrespective of who is in power, are they actually calling the shots? Because something ain't right in all this, right? Because who's being caught in the crossfire? Ordinary Australians are being caught in the crossfire at the moment. And as each year goes by, it seems to me that, the Australian community is being hit over the head by a 4x2. They're going backwards. And, well, apart from maybe house prices wobbling higher for reasons we discussed earlier on, where's the trajectory going to go? I don't know. Where is the driving force behind all this?
Yeah, and you touched on a few things there. I mean, certainly, the so-called growth lobby is pulling the strings. So that's your big business, your big property, big mining. Now I've got the universities in there as well. like who are part of the population Ponzi, masquerading as universities, but really just, migration middlemen. We've got that. And then, the Australian Treasury certainly is to a degree, especially on the migration front, because the Australian Treasury just looks at, I'm using immigration here, but it's obviously not the only issue, but it's one of the big ones. They see immigration as just an easy way to grow. It's the easiest lever to pull if you want to grow the macro economy. Just increase the number of people. And then they get as I mentioned earlier, they get the added benefit of bolstering the federal budget. Now, it's interesting about the federal budget. So since the Albanese government came in the middle of 2022, they were actually kissed on the backside by a very fortuitous series of events. So Chris Richardson's from former Access Economics, he's an independent budget watcher guy. He did some great analysis, and he showed that the federal budget was revised upwards by about $1/3 trillion. I think it was actually $1 billion since Labor came to power. And it happened principally through three factors. So firstly, we got Russia invaded Ukraine. And what that did was that spiked commodity prices all around the world. So, in Australia's case, iron ore, coal, natural gas, everything went through the roof. And as a result, the federal government collected more company tax receipts, and that was unexpected. Now, although it was good for the federal budget, it was bad for us because, as we've seen, as I've just ranted for the last however long, it also pushed up gas and electricity prices. So it was effectively a tax on us, but the federal budget was made better off by, billions and billions of dollars. The federal budget then also benefited from the record surge in immigration. So, as I mentioned before, after the Albanese government came into office, the next 2 years, net overseas migration rose by nearly 1 million people. So we had 1 million net overseas migrants land in Australia over 2 years. Now, that was unexpected. The federal budget only budgeted for 470,000 over that period. So they roughly got just over double the amount of migrants that they expected. Now, what that did was that boosted particularly personal income tax revenue, because if you have a million, excuse me, I had COVID last week, so I've got a bit of a cough. If you have 1 million net overseas migrants land in 2 years, that means more, most of them are going to work, which means they're going to pay income tax. And the federal budget, therefore, benefited from a big surge in personal income taxes. The third factor, we obviously had the high inflation. And although real wages and real household disposable incomes went backwards, in nominal terms, our wages went up. And that led to bracket creep, which meant that the average tax rate went up. And the federal budget also benefited from that. So it had these three fortuitous factors that basically increased the federal budget's tax take by about $360 billion over the forward estimates. The problem with it is, Martin, is that those three factors are now going into reverse. So commodity prices are now coming back down. Not the East Coast gas price, as you saw, but iron ore prices and coal and et cetera are falling. And that relates to, they're obviously at bubble levels, but also China's now slowing. And that means that the mid-year economic and fiscal outlook, which is released tomorrow, is expected to show a massive write-down in mining tax receipts. In company tax receipts, but also mining profits. Immigration's, although it's still very high, is falling. The rate of immigration is falling. So it's still at high levels, but that means that there'll be less new taxpayers coming in than there were. And then finally, inflation's falling. So the headline inflation rate's, down below 3%. That means that the federal budget's going to get less bracket creep going forward. So average tax rates aren't going to rise as quickly because there's less inflation, et cetera. So those three factors means that the federal budget now is facing, potentially decades of deficits, because it's coming at the same time as we've got these locked-in high expenditures in things like the NDIS. Now, I mentioned earlier, the NDIS has been growing at 20% per annum. It's currently cost just under $50 billion. It's projected to grow to about $100 billion within a decade per annum, I'm talking about here. That's as big as the age pension, bigger than the age pension, I think, in a decade's time. So we've got this rising expenditure trajectory, same time as tax expected to fall, which means that we're just going to have these bigger and bigger budget deficits. And eventually, I showed earlier how public spending has been driving the economy alongside immigration, but that is unsustainable. Like that can only happen if government tax receipts keep rising. And they've obviously risen these last few years through all this good luck, but that good luck's now running out. So they can't keep increasing the public spending as a share of GDP, which means that the economy is facing headwinds on that front, as well as lower migration, which means aggregate economy is facing headwinds. And we've got this disastrous productivity growth where we've got this no productivity growth economy because we've gutted the manufacturing sector to almost nothing. It's going to keep shrinking because we've got these high energy prices. We're still going to run immigration at a higher rate than we can build business investment, housing, infrastructure, etc. So really, we're just stuck in this low productivity, low income, low growth trap. And I just can't see how Australia is going to get out of this, especially if we just keep doing the same things that we've done for the last 20 years that haven't worked. Like, arguably, the policies in the last 20 years have made everything worse. They're the reason why we're in the predicament that we're in. But there doesn't seem to be any appetite to change track from what we've done the last 20 years that's failed, which means that we're just going to keep on failing.
Well, I think that's right. And unfortunately, the consequences is pretty serious now. We can see this in some of the latest data. The Salvation Army survey that came out over the last 24 hours showed that more people are actually having to fund their Christmas by not going to the doctor and those sorts of things. A lot of people are really struggling with just day-to-day living. And I sort of come back to a couple of simple questions. The first is, what is government for in the first place, right? It seems to me that government should be about ensuring the well-being and economic prosperity of those living within the country. And they've failed dramatically on that point, first. Secondly, I think that there are things that government should do. I think there are things that probably government should get out of. And at the moment, it seems to me that they're backing a lot of wrong horses. And then thirdly, of course, you've got this stupid fight going on at the moment about, is it nuclear or is it not nuclear? It's like, don't fight over the real things, fight over here. So I think this is a classic case of misdirection, because neither side of politics really want to deal with the fundamental questions that we're touching on here. That the point is, there are things that could be done differently that could actually make a huge difference. The reservation of gas being one of them, and a lot of other things. Dial back the migration, but it's like they don't want to do that. Why? Because it's too different from what they're actually being used to, and it's almost like they can't think beyond the box. Yeah,
that's spot on. Unfortunately, that's the way it is. I mean, we're basically the policymakers have put us on this path, and they don't want to change anything. And the energy stuff that you mentioned is just spot on. I mean, Look, I'll be honest, I've got no issue with nuclear power. It's, it works for France and it works for a lot of places around the world. The problem with it is we've got a problem now.
Yep.
And, the solution seems to be, we'll build this nuclear plant in a decade or so's time. Well, we don't need it. We need a fix now. We don't need a fix in a decade. And it seems like the low-hanging fruit here is to fix the gas issue, because let's face it, we're building renewables, whether we like it or not. I mean, I sound like I'm anti-renewable. I'm not. I just want stable, reliable, cheap power, right? And renewables, if we follow the US approach, are fine, because as long as we've got the firming power as backup that's reliable and, more importantly, cheap, you can have renewables are fine. Like, it doesn't matter if, throughout the day, on most days, 100, like for example, if we could get 100% of our electricity for 8 hours a day from renewables, and then at nighttime when the solar obviously stops and whatever, you need to then back it up with, hydrocarbons. Yeah, fine. But you need to be able to back it up with those hydrocarbons. And the best way to back that up is to build gas turbines like America's doing. So that classic example. So South Australia, I'll just give this quick example. South Australia is, regarded as a renewable haven in Australia, right? So South Australia shut down all its coal-fired plants. It has a very high renewable penetration. I think it's the highest in the world, or one of the highest. The problem, I've looked at the last two nights at 7:15 p.m. I think 2 nights ago, it was hot in South Australia, like it was hot in Melbourne. And then the night before at about 8 p.m., I went to the National Energy Market energy mix. You can go and see with live data on where the energy is coming from. 2/3 of South Australia's energy 2 nights ago and the night before that was coming from gas, right? So, this isn't a knock on renewables, but it's just showing that at nighttime, if the wind isn't blowing, and it was very still in South Australia, and the solar is coming off, and yes, they do have some battery storage, but it's not enough. You've got to be able to back that up. And the only way you can back it up, and in South Australia's case, they're burning gas, right? That's fine. That's what they should do. That means the system's working if the gas was cheap. But we've made the gas so expensive that whenever we need to turn it, whenever we need firming power with gas, which is throughout the day, because the energy supply is intermittent, right? It goes up and down, but demand's at a certain level. You've got to match that demand with the supply. And the way you match it is you got to have that firming power with gas as the backstop, because it's you can fire it up very quickly. You can turn it on and off, whatever to match. Right. So gas is the firming power, but we've made that gas expensive because we've exported 3/4 of it on the East Coast to mostly to China, and we haven't given ourselves enough at home, and we've forced the price up to nearly $20 a gigajoule 2 days ago, when Americans are paying $4 Australian or $2.50 US. They're the biggest exporter. And that is the fundamental problem. If we're going to go down this path of closing down coal and building out renewables, which are intermittent, whether we like it or not, they are intermittent, we've got to have a reliable backstop in gas. We've got to have the firming power. But we've just made that backstop super expensive. We haven't built enough gas turbines to go with it. We do have a fundamental problem in that, most of the gas now is being produced up north in Queensland. Most of the demand's in New South Wales and Victoria. So there's a problem about getting it from north to south. We've got a pipeline. That pipeline is sometimes at capacity. Let's build a second pipeline. Like, we need the government to step in with solutions here. You build a pipeline in probably 2 years. It might cost a couple $100 million, I don't know, maybe even $1 billion. But in the scheme of things, that's chicken feed. Build another pipeline or build another storage facility. We've got one called Iona in Victoria, which it fills up with gas during the off-peak. It's a storage facility to use in wintertime, but we probably need another one of those. Let's do it. Like, we just, none of this stuff is insurmountable. But the reason why it's so ridiculously, the situation is ridiculous is that if you're a Queenslander watching this and 3/4 of Australia, of East Coast gas is going out of your state in Gladstone, you should be asking yourself, why the hell am I paying $19.50 a gigajoule for my gas? Because you guys pay the same as us down south, because we're part of the national energy market. We're all the one market. And, so if we're going to shut down a reliable coal that's been cheap, and in Victoria, for example, we have enough brown coal to last us for a millennia, probably 1,000 years. Maybe I'm exaggerating, maybe it's 500, but enough for multiple lifetimes. And it costs almost nothing because you can't export it, right? We could keep burning that and we'd have uber cheap electricity, but because it is carbon polluting, for whatever reason, we've said we can't do it, right? I disagree with that. I personally don't really care. Australia's emissions are tiny. China's growing their emissions exponentially like that. 2/3 of the world's emission this century has come from China. The increase in emissions come from China. So I personally would rather energy security and cheaper cost and actually having a manufacturing sector than closing it down for the net zero. But I've got to be realistic. That's not happening. So if we're going to go down this renewable path, we've got to have the cheap gas. And we've got to make in a country that is swimming in gas, is exporting 3/4 of a gas on the East Coast, we've got to make sure they've got enough domestically, and it's got to be priced cheap enough. So it costs $3 to pull out of the ground. It should be capped at $4, what they can charge. Give them a 33% markup. That's still very generous. Have some price cap regulation going on. And, that's how you fix the energy market. But there's no will to do this stuff. The politicians just in bed with the gas giants. The gas giants like to obfuscate, make this stuff sound more complex than it actually is. always come up with excuses of why we can't do anything, why it's inefficient to do anything. And we've gotten to such an absurd situation, Martin, now that Twiggy Forrest, the net zero hero Twiggy Forrest, the Fortescue guy, always craps on about net zero and, Australia's got to cut its emissions while he flogs off bloody, iron ore off to China, who smelts the crap out of it and pumps crap into the air. That guy, he's now building a gas import terminal in Port Kembla, New South Wales, which, as I said before, LNG, liquefied natural gas, is incredibly environmentally destructive because you've got to freeze the stuff first and you lose so much gas in the freezing process. So rather than just using our own gas and not going through the liquefaction process, Twiggy Forrest, who the net zero hero, Australia's got to be net zero, is building a import terminal in Port Kembla so that Australia on the East Coast sells 75% of its gas offshore, and then we're going to import gas down south. And Victoria's going to build one as well. So all that's going to do is, I said that East Coast gas price is $19.50. If we build these import terminals, it's going to end up being like $25 because there'll be profit margin on top of that for Twiggy and his, cronies. So suddenly gas, we're going to have an even bigger energy shock where we're going to lock in even higher gas prices and even higher electricity prices, which means our manufacturing sector is going to shrink even more. You're going to have more cost of living crisis, and Australia is just going to become even more uncompetitive. This is the sort of knucklehead stuff that we're dealing with here. And this is why I can't stand people like, I'm sure Twiggy's probably a good bloke, I don't know. But these guys who just get on that parapet about net zero, Australia's got to, meet net zero by 20, all this sort of stuff, at the same time as the bloke's literally building a LNG import terminal for profit, which is going to freeze gas, which you use a ton of energy to do it. So then we can then degasify it and then burn imported gas rather than just burning our own gas and not going through the whole wasteful, inefficient process in the first place. It makes my blood boil.
Yeah, and the point there, of course, is that as the costs of living crisis continues, Chalmers is throwing more money at households to try and alleviate some of the cost of living crisis, which of course is putting upward pressure on interest rates. Michelle Bullock said that she looks through these short-term inflation adjustments and is looking at the longer-term trend. And I believe that Chalmers is going to announce further support for households ahead of the budget or ahead of the election.
Unfortunately, man, so he's painted himself in the corner. So those energy subsidies are the stupidest thing ever. I understand why he did it. But again, instead of fixing the underlying problem, which is all the stuff I've just been ranting on for the last half an hour, he's instead using our money, creating a bigger budget deficit to basically alleviate the cost pressures from this gas crisis, this gas-induced energy crisis, by giving us subsidies, which is effectively then just flowing straight into the gas cartel. So the gas cartel, rips us off, like flogs our gas to China and everything on the cheap, exports 3/4 of it, and then price gouges us at home. And then Chalmers' big solution is, I'll get rid of some of that inflation, not all of it, just a little bit of it, by spending billions of dollars of our money to subsidize it, which then effectively just goes straight into the pockets of the gas cartel.
Yep.
It's just insane. It's an absolute grift. And the problem with it is, if we build these import terminals, Twiggy Forest import terminals, and we lock the pricing at $25, which is probably more likely a gigajoule, well, then Chalmers' his solution then will be, hang on, that's too much. Okay, we've got to give bigger subsidies now. So then we're going to be effectively, we're going to be spending our taxpayer money, which could go on a whole bunch of better stuff. You're going to spend billions more taxpayer dollars to effectively feed Twiggy Forrest, to go into Twiggy Forrest's pocket. While, it's just, the whole thing is just so moronic. And it's the same in the rental market, not as bad, in terms of budget cost, but, the federal government brings in unprecedented number of renters, imports an unprecedented number of renters from overseas, creates a rental crisis, and then the solution is, we'll hand out some rental subsidies to those through the Commonwealth Rent Assistance Scheme, which only goes to lower income renters anyway. But that costs, I don't know how much it costs, probably a couple $2 billion. But it's like, hang on, you guys created the problem in the first place. So you create the rental crisis by pushing demand so far ahead of supply in a supply-constrained market by ramping immigration to ridiculous levels. And then your brainiac solution, instead of slashing immigration back to sensible levels, is we'll just keep it high and we'll just go and use your money to then alleviate some of the cost pressure. It is knuckleheaded stuff here. Like nothing ever, they never try and fix the underlying cause of these problems, right? It's always Band-Aids on top of Band-Aids. And this is why I hate this stuff so much, because these subsidies are just Band-Aids. They're just budget Band-Aids to smooth over their own policy failures, instead of just fixing the policy which they failed. That's the logical thing to do, is if you do a policy and it ends up being a failure, you change policy. But these guys don't change policy. They usually double down on the stupid policy, and then they go and try and Band-Aid over the failure with subsidies and things like that, which we pay for. It's our money. It's just insane.
Yeah, I agree, unfortunately. And, as I said earlier on, the problem is that, of course, it's ordinary Australians who end up at the damp end of the stick, while politicians, of course, with their higher portfolio of investment properties are doing quite well, and they've got their superannuation and everything else. So they're doing fine, thank you. What about ordinary people, right? Now, that takes us quite nicely towards the end of the show here, to think through interest rate trajectory. Now, we've talked about the fact that inflation is still relatively sticky, or that's coming down a little. Michelle Bullock says she's looking through some of these support levels. The markets are suggesting maybe February, maybe May next year. We've got 2 new board members in the new construction, which may or may not have an impact, nominated by government. So you wonder what that's going to do. How are you reading it over the next few months, Leith? And, do you think we're going to get a rate cut, or do you think that's going to help house prices, or are we going to see more weakness in the housing sector as well?
In terms of when we get a rate cut, I've got no idea. Probably, look, I think markets are staying. Last time I checked a couple of days ago, it was about April, I think, was the main call. Some people like CBA are saying February, maybe. I don't know. Like certainly after this Q3 national accounts shocker, I was like, man, like they've got to cut in February now. But then a week later, we got the 3.9% unemployment print, which then muddied the water. But the problem with it is, as we know, the underlying economy is incredibly weak, and that's very obvious in that data, on Q3 data. It's all public sector jobs, basically, in immigration. But and the unemployment rate is artificially low from this huge surge in non-market public sector jobs. As I showed before, pretty much all the jobs growth the last few years has been through that avenue, and the private sector is basically flatlined. But the RBA is going to look at the aggregate economy, right? So they would have looked at that, 3.9% unemployment print, and they're like, okay. And certainly their minutes, suggested that they're not going to cut. They're not looking to cut in February, but that was the read I got. Same time, though, I think the next smoking gun is going to be the Q2 inflation, which I think comes out in late January.
Yep.
Sorry, Q4 inflation. What am I saying? Q4 inflation, the current quarter's inflation comes out in January, so late January. So that'll be the next main data point. We're not going to get much before that, because it's obviously the Christmas period. The labour market figures in January tend to be for December, which come out in January, tend to be very volatile, just because of the time of year. So we'll have to wait and see. But look, excuse me. Yeah, on rates, no idea. First half, I think certainly. The interesting thing, though, the thing I'm watching about it more is, the federal government's going to go to an election in May. It has to go by 20 May next year. And if they don't get a rate cut before that election, or if they even get one very, very late in the piece, I think it's going to be an absolute, bullet to the head to the Albanese government. They're already behind in the polls. People have obviously experienced the biggest decline in household incomes on record. We've got the housing crisis, all that sort of thing. So sentiment's pretty poor, amongst Australians. And if they don't cut rates, well, then it's going to be, I think it could be the death knell for the government. So certainly Jim Chalmers and Albo will be the two closest watchers of the RBA in the next few months, because their political careers literally, I think, are hanging on whether the RBA cuts rates, ahead of the election. Because if that happens, you'll probably see consumer sentiment bounce. People might be like, oh, thank God the worst is over, things like that. And if the RBA doesn't, well, I tell you what, mate, it's going to be an absolute rough shot for them. One other thing you mentioned was the RBA board. That is the biggest nothing burger I think I've ever seen.
Yep.
So the monetary, basically they had an old board that split it into two, a monetary policy setting board and overview board. The monetary policy setting board, which is, let's face it, that's one we care about. It is the same all bar two members. So you've got the two from the RBA, the Treasury Secretary, then there's 6 private members from private industry, other areas of the economy. Of those 6, 4 of them are exactly the same. We've got 2 new ones. Two of that people on that board have gone to the other one, which is the oversight board. The oversight board is just an operational board. It's not going to do anything. In terms of its impact on interest rates, I think it's going to have 0. It's going to be pretty much steady as she goes. I'm not actually a fan of the new board, the new structure, because it just means more bureaucrats. So instead of having one board of 9 people, we've now got 2 boards of 18. And, well, I mean, it's 6 private on one, 6 private on the other. They've got the same, 3 RBA, 2 RBAs and a Treasury. But it's just more bureaucrats to pay for, basically.
Yep.
Like, I don't think it's going to make any functional difference, except that I imagine these people are on fat salaries. I could be wrong. Maybe it's not that fat, but it's just a whole bunch of more bureaucracy that we're going to have to pay for. So it's probably a pretty sweet gig if you're one of the people on the new oversight board. You're going to get paid a nice, pretty penny, I imagine, for not doing much, and we're going to pay for it. But yeah, that's the only reason why I think it's, I'm against it. But basically, I think it's just a big nothing burger.
Yeah, I agree with you about the board structure, but the RBA is still, I think, ploughing a furrow, which suggests rate cuts not coming soon. We are seeing more people, of course, in financial difficulty with their mortgages and with their rent. We're seeing the cost of living continue to rise relative to incomes, which are quite weak for many people. But the cost of living, of course, are driven by all the things we've been talking about, right? High energy prices, et cetera, et cetera. So those potentially aren't going to change anytime soon. So I think as we come into 2025, I think it's going to be a very uncomfortable year for many people. The trouble is, Leith, I share your views that really there is no imperative for either side of politics to start doing things differently. And I find that horrendously revealing, but also horrendously nightmarish. It means we're going to get more of the same old, and no real change. And that's a problem.
Yeah, and it's even worse for someone like me losing Victoria, because we've got a absolutely crappy state government as well. So, I'm going to get hit by both. But hey, Martin, can I ask you a quick question? Actually, I'll put you on the hot seat if you don't mind.
Yeah,
no, I might go first. But what's been your biggest surprise this year? So I'll give you mine first, and then for me, or the biggest area where I've gotten wrong. So for me, I was pretty adamant a year ago that we get rate cuts in the second half of this year. And the reason for that was I thought the economy is going to be, in a tailspin, and therefore we're going to get a big spike in unemployment. Now, obviously, right on the economy is in a tailspin. It's probably worse than I actually thought it'd be. But the biggest thing that I got wrong, and I think everyone's been caught by surprise, was this unprecedented surge in non-market jobs.
Yep. Which
I never would have, a year ago, I never would have imagined that we would have seen this huge spike in these government service jobs. And therefore, despite the fact that we're in a, was it 7-quarter per capita recession? And, generally speaking, if you look historically, the GDP or the economy, economic activity is tracked pretty closely with the labour market, at least the market economy. And, Gareth Aird and from Commonwealth Bank and Alex Joyner did a chart, unfortunately didn't include in this pack, tracking Australia's growth against the market sector jobs, and it was almost 1 for 1. So that relationship hasn't broken. What has broken is that we've had this huge surge whereby virtually all the jobs growth in the last 2 years has come from the non-market sector, mostly through the NDIS and these sorts of things. That is the one area I never would have picked in a million years. And honestly, I think that's the reason why we're not getting rate cuts, because the economy is incredibly weak, but the labour market is strong. And it's only strong because the government has effectively got the jobs printer going. through these government jobs, and that there is why I've got low unemployment. It's also why I think the RBA's been backed in a corner and can't cut rates because of this massive public spending binge, which I did not foresee. I'll be quite honest.
Yeah, well, I certainly at the start of the year didn't project rate cuts through this last year. So I was holding on the view that the inflation would be stickier for longer, which has proved to be the case. The thing, though, that I think was also surprising was that the employment number was lower and, higher, and the unemployment lower. I remember I wrote an article 7 or 8 years ago calling out the bedpan economy and basically saying there's more and more jobs going into healthcare and ancillary services. Now, those are really important services, and I don't want people to think that we're not actually valuing those services.
It'll be funded, though.
If it basically sucks in all the available funding and work, productivity goes backwards. And that's really the problem. And so this idea of crowding out, the government has crowded out productive areas of the economy due to bad policy. And so I think for me this year, it's the concept of crowding out, coming out and being revealed in the statistics, which is for me the most critical takeaway from 2024. And I also believe that the government will face an election with no rate cut, and they will probably get hammered. The trouble is that I don't think the other side of politics is any better.
Mate, I can guarantee you, in, I don't know, fast forward a year's time, we'll be doing this.
Yeah.
And we'll be, assuming there's a change of government, we'll be having a similar whinge about the Muppets that are in, the new Muppets that are in Parliament. Like, it just, unfortunately, it's Pepsi Coke. It really is. There's a few ingredients changes around the margin, but they're basically, it's off Pepsi and off Coke because they both taste terrible. But there isn't that much difference between them. Let's face it, they've still got the same puppet masters, or pretty much the same. It's just a few degrees of difference. And you and I have been doing this for a few years now, and I think we did it before even this current government was in. And we used to have the same complaints about the Morrison government. It's just that a bit different. I used to complain about immigration back then, but now it's just obviously off the charts. Like, I never would have foreseen this sort of immigration boom. But it's still the same. The Australian economy's had the same structural problems for a long time now. It's just that it seems like the chickens are coming home to roost a bit more now, especially with the energy stuff. And it's like the frog's been boiled for so long and it's gotten to that inferno temperature now, where everyone started to notice. They're like, oh, hang on. Especially, and you do notice when your real per capita household disposable income's fallen by nearly 8.5% in 2 years. You're going to notice that, and we have.
Yeah, and I would say that if you look back and think about the journey, right? The journey is very much a question of, well, who's calling the shots? And I still believe that there are, powers behind the powers, as it were, that actually are much more influential in what's going on than I think many people would assume. Democracy is not necessarily working in terms of actually providing a mechanism to enable the population to, form a better view of the future. And in fact, they're being dragged back. And I've also got a view to say that even, the way that money works and the way that tax works in Australia, that is also very much against ordinary people. And I think that's something else that we, the way that the structure of the economy is built and has been built for some time means we're not going to see any turnaround strategies. And I suspect we're going to see more people voting for some of the smaller parties. But the question is, will that make a difference? Well, in the UK, it hasn't made much of a difference, frankly. The incumbent party got 1/3 of the votes and 2/3 of the seats because of the first past the post system, and they've muffed it as much as the other side did previously. So it seems to me that we have a political malaise in many Western economies at the moment, and people unwilling to deal with some of these points. But the other side of the coin, Leith, and we've touched on this before, there are things that could be done, and that's what I don't understand. You could deal with gas reservation, you could deal with migration. Those two things alone would make a huge difference to the trajectory of the economy into next year. And by the way, it would also give the RBA probably more leeway to be able to actually cut rates. So to me, there are levers that could be pulled, but no, they're politically unacceptable, and that's the point. So ordinary households are being thrown under the bus by politicians who are actually only interested about getting re-elected, and that's the bottom line.
Yeah, and politics here is all about being less worse than the previous person. It's not about being better. So it's like, like just look at Peter Dutton at the moment. He's just, well, if you look at Albo before him, Albo's thing was, I'm not Scott Morrison. That was his key selling point. So ScoMo was on the nose. And so we got Albo, who basically just campaigned on not being Scott Morrison. And now you've got, Potato Head Dutton, who's now basically campaigning on not being Albo. He's not really offering any real solutions. Like, the nuclear stuff's a gimmick, and it's from decades away. And there's a few little, bits and pieces, but it's not really selling a good package, is it?
No, it's not.
So, which means it's just getting more of the same. Unfortunately, we're just governed by idiots in this country. It's a clown show, unfortunately.
It is, but the good news, it keeps us in business, Leith. You with your various businesses, me with mine. There's always plenty to talk about.
Although, mate, if that disinformation bill got up, I don't know, would we have been even allowed to have this conversation?
Well, that's a good point.
Thankfully, it didn't.
No, I'm grateful for that amount of free speech that we've got, even if they'll probably go through the back door and try and do digital IDs and things to try and make it less easy. But look, I want to say, Lee, thank you very much for your contributions through the year. Greatly appreciated. Always really insightful and very penetrating in terms of your insights. If people want to find out more about you, where's the best place for them to go?
So if you want to read my written work, which is, it's my 9 to 5 job. Well, it's actually not really 9, it's different. Like I work different hours, but anyway, it's my regular job. It's macrobusiness.com.au. So that's where, all my written work is. I do a lot of media these days. So I do heaps of radio. I've done, 2 interviews today, I got 3 tomorrow, etc. Heaps and heaps of radio interviews. If you want to listen to or watch those interviews, I've got a YouTube channel at Leithvo, Leithvo. I don't know how it's got 10,600 subscribers now. So it's doing all right. I don't know why. People obviously like just to hear me rant. What I do like, I don't like doing the TV stuff as much, but the long form interviews on radio. And I've got a weekly show with a guy called David Flint, who's a really smart guy. He's on hiatus until January, but we do like 20-minute interviews, a bit like this. It's sort of like this, but 20-minute segments. And those every week, starting up again in January. So if you like that, like this sort of conversation, I guess, is what I should say. Just these interviews like this, go to @Leithvo on YouTube.
Yeah, terrific, Leith. Well, thank you very much indeed for that. And I look forward to catching up with you in the new year. There will be, of course, other opportunities for you to come on the show here. So I look forward to that. I hope you managed to get some time off. I know you have to continue to feed the beast, but get some time off in the new year, hopefully. And I look forward to catching up with you later on in the year.
Yeah, cheers, Martin, and thanks very much, mate. Love your work, and we'll chat again in the new year. Hopefully, it should be fun anyway, watching how this all unfolds.
Terrific. Okay, thanks, Leith. I'll take you offline and I'll close the show. Take care. There you go, folks. I enjoyed that. Very, very important from Leith there, and some critical information that we've shared. Just to tell you that next week it's going to be Tony Locantro and myself on for our Tuesday show just before Christmas. So we're going to go a bit of look back, look forward, and in Tony Locantro's inimitable style. So I hope you enjoyed that. And the dogs are here still. They've hardly moved. Oh. Meteor's just out of her bag, so she's got no head, but there you go. I could do this. There you go. Just to give the full view. There you go. There's a Meteor there. And thank you very much for watching. Keep an eye out for my recorded shows over the next few days. They'll be live next Tuesday as well, and just before Christmas. So I'll look forward to seeing you then. And I hope that everybody has some cool weather for those who want it, and for warm weather for those who want that. So we'll see. Thank you very much. Take care, and we'll see you soon. This is Martin North from Digital Finance Analytics, signing off. Cheerio.